Hey, everybody. We're just going to give it a minute for folks to roll in before we get started, but welcome. All right. I think we will kick it off. So, welcome to our fabulous webinar on packaging EPR compliance for promo with me, Liz Wimbush, my colleague Rachel Zock, and our guest Ami Borenstein from SnapLink Consulting. So just know that this will be recorded and it will be available on the same page that you're on right now. So you can bookmark it to share with your coworkers who couldn't join. We'll also be monitoring the chat for questions to save for our Q&A period. So don't be shy, drop them in as they come to you. So we're here today because while they aren't new, EPR laws have started to feel like the next PFAS challenge for our industry. And handily, it's another new acronym for us to learn. But we love acronyms in this industry, right? So you probably already deal with EPR in your day-to-day life. Rachel will go into this in a little bit more detail, but think batteries, mattresses, and tires. Ultimately, the goal of EPR laws, especially with these new packaging ones, are to drive innovation and fund the responsible end-of-life management of what ends up in our municipal garbage and recycling bins. They have both carrot and stick components, incentivizing innovation, packaging design, minimizing single-use plastic, and ultimately reduce what ends up in our landfills, becoming microplastic particles that are now found in the living tissue of creatures large and small on all continents. Ugh. The stick is eco-modulated fees and non-compliance fines, which Ami will go into in more detail, but are not fully set in stone right now. So our goal is to help equip you with the knowledge you need to determine your compliance risk by figuring out where in the producer hierarchy you fall and what you need to do to determine your first steps. What's measured is managed, right? Not all states have these laws in the books, but many more are in the process of putting together bills to propose them. So even if you don't do a lot of business in the states that have them right now, it's good to be proactive in your planning. But first, the sexy stuff. We aren't lawyers, and we can't provide you with legal advice. As you'll hear all of us say, extended producer responsibility legislation in the US is in pretty constant state of flux. Both PPAI and SnapLink Consulting make every effort to ensure both the accuracy and timelines of the information provided in this webinar and the supporting resources. However, it is intended for general information purposes only and should not be interpreted or relied upon as legal advice. So here's a quick overview of the agenda for our time together today and what we hope you'll take away from it. We'll be sharing our brand new shiny co-published white paper that we built with our friends at Taft Law, sharing our existing packaging EPR coverage, and handing it over to Ami for a full review of what, where, and how these state laws might impact you, with a focus on the producer hierarchy element of them. We want you to come away from this with a better understanding of what these laws mean and where they apply, as well as how to determine if you fall in scope of being an obligated producer, which, spoiler alert, you may very well be even if you didn't produce the packaging. We will share key deadlines, which vary by state, for both registering and reporting, as well as what non-compliance penalties could look like. We'll even touch on some Canadian laws in the same realm. Before we dig in, I did want to preface this all by saying these laws present opportunities for innovation, which is something our industry thrives on. There are cost-saving opportunities, both in fee savings, as well as resources consumed in making a switch from non-recycled packaging to alternatives like paper. With that inspiring sentiment, I want to let you know that you can drop any questions you have as they come to you in the chat. We'll have lots of time for Q&A with all three speakers after the presentation. So if we haven't met, I'm Liz Wimbush, the Director of Sustainability and Responsibility here at PPAI. I joined the organization just over 2 years ago as the first person in this role, with the goal of helping PPAI members in their sustainability journeys, regardless of where they are in it. It's not about attaining some perfect goal, but rather continuous improvement. I'm a big believer in progress over perfection, and I hope you're as geeked as I am to learn all about our new favorite acronym, EPR. So first, the exciting news, if you haven't seen it already, we are thrilled to present you with a white paper. We co-published this with Taft Law. They are an environmental law firm that we've had speak at our Responsibility Summit a few times. The demand for something like clear guidance and this document specific to promotional products was made clear by two of the volunteer work groups that I'm fortunate to be the staff liaison to. Shout out to PRAG and SAG. Earlier in the year, they provided a draft of the kind of information we should be sure to include, some of their early compliance concerns, and since then, myself and Rachel have been working to learn about and translate these laws into, again, not legal advice, but digestible guidance for PPAI members. The white paper is now live on our sustainability page, which you can access from this QR code. It is not an easy breezy one pager, but we wanted to be thorough. At least we did manage to get it cut down from the original 48 pages. That is not, you did not mishear that, 48 pages. We will be regularly reviewing and updating it as needed and always welcome your feedback. So please reach out to Rachel or myself. We went with this format so that you could have a guide to refer to that was industry specific and that you could share within your company to get anyone else up to speed on the what, where, and how, since compliance with these laws will not be contained to just one person's job within either distributor or supplier companies. With that, I'm going to pass it over to Rachel to give you a bit of a primer on EPR and PPAI Media's efforts to keep you informed.
Thank you, Liz. Hi, I'm Rachel Zock. I'm PPAI's Public Affairs Manager. I've been part of the association's media team since 2022, and I've been monitoring and reporting on packaging EPR laws for over a year now. The white paper and this webinar are just the latest resources in our ongoing coverage of the issue, which emerged as maybe the hot topic at this year's PPAI Responsibility Summit in September. Now, as a consumer, you may be familiar with the EPR concept when it comes to tires and mattresses and other household items, as Liz mentioned. Tire shops, for example, tend to be especially transparent about the mandatory recycling and disposal fees that are part of the price when you replace the tires on your vehicle. So the concept of EPR is nothing new. Extended producer responsibility laws for packaging have been in place in Canadian provinces for more than a decade, and the EU adopted its packaging waste directive in the 90s. A recent update and new rules are coming into force next year on that, so Europe has been regulating this for over 30 years now. The US is just catching up to the rest of the world, state by state. We're also keeping an eye on a law passed last year in California that means textile recycling is coming soon, and we'll be providing resources on that in the coming year. Next slide, please. Thank you. But back to packaging EPR in the United States. Here are a few highlights of our coverage so far. All of these are linked at the bottom of the PPAI Media webpage where you're watching now. Our most recent piece, EPR laws are coming for your company's packaging data. This provides a quick rundown of what extended producer responsibility for packaging entails and a summary of the 7 currently active EPR laws in the United States for packaging, including key deadlines and links to get more details. As Liz mentioned, there are more in the works. There are 7 that have been signed into law. Next, we have the Guide to Reducing Waste in Packaging for Promotional Products. This provides practical suggestions to minimize plastic and overall waste in packaging. That includes material swaps and potential operational changes. And then what promo firms need to know to get started is a Q&A with an executive from Circular Action Alliance. That's currently the only active producer responsibility organization, or PRO, in the United States that is dedicated to facilitating EPR programs for paper and packaging. And you'll learn more about them from Ami in a few minutes. Again, all of these resources are linked at the bottom of the webinar page for easy access. And now I'll turn things over to Ami Borenstein, founder and CEO of SnapLink Consulting, to break down what these laws mean for your business and how to determine your obligations.
Thank you, Liz. Thank you, Rachel. Really happy to be here today. Let me just get my screen shared. Okay. And away we go. My name is Ami Bornstein, invited by the team you just heard from to present today. But this did not come out of left field. I have spent 30 years in the consumer goods industry with a heavy involvement, heavy focus on apparel. I've spent 20 years in product sustainability. So, one of my last roles when I was in house was in product sustainability for a brand. And then coming up on 10 years as founder and CEO of SnapLink Consulting. We are a global team, global ESG consultancy, and we work in consumer goods, including apparel, hard goods, food, pharma, aviation, software, and we have promotional products clients. So, really, really happy to be here with all of you today. And away we go. So what we're going to cover today is the what and the why of EPR, which are questions we get frequently, how to think about it from a framework standpoint, a pretty deep dive into the active states and upcoming states, as well as touch on Canadian provinces. We built out for this event today, we built out some PPAI member specific case studies. Again, we do have clients who are PPAI members, and so we've learned quite a bit about the business and how it's structured. We've actually had PPAI members as clients for 5 or 6 years now, so we understand the sector quite well. So that's what informed those case studies. Talk about what it takes to build a program to comply, some resources that are available for you, and then, of course, a conclusion. So away we go. So EPR, what, why, and why now? I think you all know this, but what EPR is, and we get this question all the time, is a policy model that mandates that producers, and that's intentionally placed in quotes, manage end of life. And end of life refers to collection, disposals, and fees. Largest area of EPR globally is packaging. As a firm, we're currently tracking 45, give or take, global jurisdictions that have packaging EPR requirements. So if you are a global company, you actually have 45 jurisdictions with which you have to comply. So next question we get all the time is why? Well, the short answer is we all wake up with myriad packages on the front porch each morning, and packaging generates about 82 million tons of waste annually in the U.S., of which only a fraction actually gets recycled. So it's very, very high cost burdens on municipalities, on taxpayers, and then EPR. The intention is really to shift to the businesses that make the decision about what materials to use for packaging and how much material to use for packaging. And why now? I think it's a number of reasons that you probably are all familiar with. So there's a lot of momentum, and many of the laws we see here in the US are modeled off of the EU laws. So a lot of momentum coming out of Europe, a just absolutely rapid increase in packaging waste. Just the amount of packages we see in all of our lives has just gone sky high. And EPR adoption, as Rachel and Liz mentioned, is moving into textiles or some in electronics. Really, just shows that this is only the beginning. So let's think about this from a framework standpoint. We're going to start with a little bit of who and how. So this is the really probably the most challenging element of this work, which is who is a producer, because ultimately these laws say the producers are the ones responsible for providing this data, reporting this data, and ultimately paying the fees. So at a very high level, a producer is any entity that introduces covered product into a jurisdiction. Simple to say, hard to untangle, because that could be brand owners, that could be importers, that could be retailers. And again, we'll kind of cover that. It's a very, very nuanced analysis. Much of the work we do with clients is actually trying to unpack that. The next question people ask is, how do we comply? So you have to confirm your obligations across legal entities. I don't know that subsidiaries are a big part of the PPAI ecosystem and member base. But subsidiaries do, if any of you have subsidiaries or are a subsidiary, they do introduce some complexity. But essentially, you have to confirm your legal entity. You have to join a PRO, with which Rachel mentioned is the Circular Action Alliance, and you submit annual reports and pay the fees. Again, all easy to say, all fairly complex to do. And sorry, forgot there was one more point on the slide. You need to adjust packaging practices in line with recyclability goals. Okay, so what do you actually have to report? So packaging components, including printed paper, and sometimes, depending on the jurisdiction, secondary, tertiary, or shipping packaging. You'll hear the term secondary, tertiary, and shipping packaging. There aren't great consistent definitions. We don't worry about them as specific layers of packaging. What we do is we just think of primary packaging and kind of everything else because that's generally, or not, that's oftentimes how things get reported. And you do have to separate the primary from things like shipping because, for example, in Oregon, you do have to report your shipping packaging, like your pallet wrap, whereas in Colorado, you do not. So reporting includes total packaging weight by material type, the packaging format, and this is added complexity from what we're used to. You're not going to see these things just say PE or polyethylene based on the chasing arrows symbol and the number 6 or whatever on the bottom, but it actually will break down into 65 categories in Oregon and Colorado, 95 categories that need to be reported in California. So fairly granular analyses. B2B packaging, as I mentioned, in some programs, but exempt in others. And then there are emerging expectations. These we don't necessarily have to worry about today, but important to keep on the radar. And those include recyclability classification. So that's going to get more granular by state. Post-consumer recycled content disclosure. And a lot of us use PCR now. The problem is this is going to have to be chain of custody documented PCR. It's not going to be enough to say, well, my supplier told me it's PCR. So that will change. We'll see labeling requirements and environmental impact attributes, all future states, but important to be aware of. So let's go into, oh, and audit ready, sorry, I keep forgetting that last bullet on each slide. Audit ready documentation or data validation. So let's dive into state by state what's going on today. So Oregon, if you have not reported, you are officially in violation. Oregon has actually started sending out notifications. We have clients that have received, I think, either two, certainly two, some of them three notifications, originally from Circular Action Alliance and now from the state itself. We have really strong relationships with regulators, so we've been able to help clients with those conversations when they are behind. That Oregon deadline was April 30th. So if you have not reported and you are a producer, if you've not reported to the state of Oregon, you're at fairly high risk. So let's dive into what the program looks like and what those risks actually are. So Oregon leads in environmental depth and complexity, and eventually they're going to move to life cycle assessment reporting. They are not there today. Eventually, they're going to move to a more aggressive eco-modulation strategy, meaning lower fees tied to lower life cycle impact. We are not there today, but again, important to know. Notable inclusions, B2B packaging in the state of Oregon, so that's important to be aware of, as well as in very, very significant, as I mentioned a moment ago, levels of enforcement coming out of the Oregon DEQ, and then the penalties. So this is important because if you have not reported, you are exposed to these penalties today. And that includes a selling ban in the state of Oregon, as well as penalties of up to $25,000 per day. And actually, Oregon released a list of registered companies. So if you have not reported, we don't know if they're going to release more lists, but it does expose you to potential reputational damage and exposure, which we all know from a business standpoint can be disastrous. In Colorado, and moving pretty quickly through all of these because this recording will be available to you, and there's a lot to cover today. So Colorado focuses on very straightforward compliance, probably the simplest of the current active programs. The deadline was July 31st. If you have not reported, you are in violation. Colorado is actively sending out notifications. A big notable feature of Colorado is that it excludes B2B packaging. So it offers simplicity reporting within Colorado, but creates complexity if you report Colorado first, for example, but ignore other packaging types. The PRO is Circular Action Alliance, and they're the exclusive administrator. So you don't have, like in Oregon or California, you don't have state agencies getting as deeply involved. And key requirements are the kind of basics around these EPR programs, which are producer registration and auditing. They are still under development on their modulation effort, and the penalties that we're seeing coming out of Colorado are a selling ban and fines up to $20,000 per day. As we move to California, this is the most expansive and aggressive model, as you can imagine, in the United States. So the most categories, so 95 compared to, I said 65 earlier, but it's around 62, I think 63 in Oregon and Colorado, and around 95 in California. So one of the things that we've had to do to support clients is actually build a taxonomy. So when we classify packaging as a certain type, we're able to kind of flow that to each state in the appropriate category, which does introduce quite a bit of complexity. Has the most aggressive recyclability enforcement. I highlight this point because really of everything we're talking about sourcing teams, we're talking about operation teams, we're talking about maybe design teams, product teams, but now we're actually taught for all of the other items that we talked about, but now we're actually talking about your marketing team. Right? Communication is affected in California. What can be called recyclable in the state. So really, truly, this is, as I think Liz mentioned, this is not just one person in the organization. Any scaled organization is going to have to get lots of teams involved, including their marketing team. It's led by Cal Recycle, so not just Circular Action Alliance. So Circular Action Alliance is the producer responsibility organization, yet Cal Recycle is very involved, just like in Oregon. There are some bright, I think, points in California. There are some compostable packaging opportunities and regulations, and so that's great because I know many of our clients in the PPAI space do use compostable components to packaging. You do now have to certify those to certain standards, but the opportunity is there to do so. Penalties, as you would imagine, are the most extreme. So selling ban in the state and up to $50,000 per day. We're seeing Maine come online. They were the first to pass, but a little slower in implementation. My home state, I'm in Seattle of Washington, includes reusable packaging in 2026. Minnesota, registration deadline for Minnesota has already passed. So one of the things you'll want to do if you haven't already is register for Minnesota. But next year is when the reporting begins. Maryland is coming up, and then the list is long. New York, New Jersey, Massachusetts, Illinois. There's no escaping this. This is functionally today, but arguably, but certainly by this time next year, law of the land, with a dozen or so states having these regulations. Canada, zero plastic waste agenda. Canada is a little bit better at a national strategy. Now they have an agenda, but not a law at the national level. So key provinces have picked this up. So we're seeing Ontario move pretty quickly. They've had that in place for a number of years. British Columbia, a little bit later behind Ontario and Quebec, but also I think their program went into full effect last year. And Quebec. And I will tell you, we do have clients who have been audited and notified by Canadian provinces. So if you're doing significant business in those provinces, and we'll talk about thresholds in a moment because those are very complex. But timing is that they're basically active today. And so it's very, very important if you're doing notable amounts of business in Canada to investigate that immediately. And then that does intersect with hopefully those of you doing business in Canada know about the Canadian Federal Plastics Registry. So that kind of is in conjunction with that federal requirement. And then many of you know much of what we're covering here today. However, this may be the single most important slide of this presentation. The reason is there are many very large PPAI members, but we also know that there are somewhat smaller PPAI members. So the thresholds are very, very critical. So thresholds are $1 million of business in California. If you are under that, you do not have to report. For Colorado, Colorado and Oregon, it's 5 million in global revenue, and you have to be delivering 1 ton of packaging. So you are exempt if you're less than $5 million of let's say Colorado, for example, you're exempt at less than 5 million in global revenue or less than 1 ton of packaging shipping to the state. Still a fairly complex evaluation to determine if that you're under that 1 ton, but it's really, really nice for a smaller business who maybe doesn't have clients in Colorado or has, small clients or few in Colorado. You can quickly run a back of the napkin and say, oh, wow, we're only at half a ton. We think, okay, great. That's enough of a margin of error to say we're safely under the threshold. Or if any businesses on the call today are under $5 million, either startups or just smaller, you're under those thresholds. But the thresholds I want to note are very, very different. So as we get it by jurisdiction, if we get into Manitoba, if you sell $750,000 in Manitoba, you have to report. Under that, you do not, and on down the slide. So very, very important. So let's get into some case studies. My team and I prepared this specifically for this webinar today. So let's get into it. So case study number 1, decorating domestically purchased products. So we have the same format across these 4 case studies. So we tried to break it down as clearly as possible. So in this case, let's say you buy a finished product from a US supplier, add a logo, and deliver them for internal uses, events, or resale. So the key concept in this case, EPR responsibility, let's say it's a Hydro Flask bottle. In this case, the EPR responsibility would stay with the company that first makes or imports the product, in that case, Hydro Flask, and not the decorator. And there are some key considerations. So number 1, the product's already on the market under that Hydro Flask name. The decoration is generally service, right? You're not creating a new product. However, if rebranding or repackaging occurs, responsibility may shift. So, for example, let's say Bank of America is your client. You rebrand a Hydro Flask bottle for them, and they decide to sell it. Under some of the laws, that may shift responsibility to Bank of America. So the practical takeaway, manufacturer importer is typically responsible, but rebranding can transfer producer obligations in some jurisdictions. So I know that is not crystal clear, but this is how we go through the process of thinking it through. We evaluate each transaction type and try to understand, bucket them into groupings and try to understand where the responsibilities are. So number 2, let's say you import an unbranded product for customization. So you bring in a blank into the United States. So key concept. So importing and branding usually makes the importer the producer. So in this case, you would be the producer because you're bringing in the product under a new identity into the country. So some considerations there. Importing triggers market entry under EPR definitions. Branding creates a commercial identity for the product. Unless the client assumes producer duties, member may be responsible. And this is a very, very fine and important point. In some cases, we are seeing clients say, we understand this is our brand. We aren't really trying to shirk responsibility. In fact, we're trying to aggregate and understand responsibility. And therefore, we're going to take on the EPR responsibility. We have seen situations where the PPAI member technically would be responsible, but because it's branded, with their client logo. It's a bit of a jump ball, and the client has agreed to take on responsibility. So the biggest thing here is you're going to need a lot of dialogue with your client. So practical takeaway is importers should assume producer status, but confirm with clients. So number three, if you produce client branded goods for sale or internal use, so you decorate products under client's brand, sold or distributed by the client. In this case, the brand owners typically holds responsibility because they are the ones selling to consumers. So the consideration, whoops, when client sells the item, they're often then considered the producer. If the products are internal uh, only, not sold, that can revert back to you as importer. Clear brand and distribution terms reduce ambiguity. So again, dialogue with your clients, and practical takeaway: define that brand ownership and EPR responsibility early and often. Kitting. So let's say, I mean, we know a lot of you do a lot of kitting. So the key concept here is each product in the kit and any added packaging can carry different responsibilities. Very complicated. So each item retains original producer designation. New packaging or branded containers may create additional producer obligations for you, the PPI member. Responsibility follows the entity introducing each component into commerce. And the practical takeaway is, oh my God, kits are a mess. Very, very challenging. You gotta really stay on the game when it comes to kits. So again, moving pretty quickly, almost out of time here, but we are in the home stretch. So what does it look like to build your internal programs? Well, you absolutely need to use data and need to use systems, and you must design for complexity. So you have to integrate data from all your systems. We're seeing a lot of people use Power BI to pull a lot of that together. You have to standardize key fields like weight, material recyclability. Right now, we know in all systems that's generally not harmonized, not standardized, and a bit of a mess. And none of it lines up with what the states want you to report. So you have to put that together. Connect packaging data to sales by state, by channel, and fulfillment type. You might start coding transactions with a fulfillment type so you understand what is completely out of your EPR responsibility, what's a gray area, and what's completely in your responsibility. You need this to be cross-functional. As I mentioned, you've got to be looking across jurisdictions. You have to be pulling in data on a reliable, continuous basis. You need ownership and governance. So again, involve all your teams, and you have to elevate your packaging data. I mean, all of these things, these are so much easier said than done. This is a very, very heavy lift, but this isn't going. So build for continuity. Register your obligated entities with CAA and with Canada. Embed reporting into those annual planning and workflows. Keep documentation organized and track rule changes. So I know that's only one slide, and that's a year plus worth of work on average with clients. So apologies for that, but it's so different with every client. They're behind every single one of these bullet points is 6 weeks worth of work, but just really at a high level, this is what it looks like. Thing we want to emphasize: you're not alone. I mean, as Liz and Rachel mentioned, so many resources on the website. At my company, Snaplink Consulting, we were not as diligent with reducing page count, so we're not at 25 pages. We actually have a 31-page ebook that you can grab with that QR code right there. And that ebook is not specific to PPAI; it is more broad, but we believe it offers good guidance. It does have that threshold table in it, so if you want that for reference, we've gotten great feedback on this EPR ebook. We offer comprehensive strategy, data mapping, cross-functional coordination, and we do, if you sign up on our site, we do regular email and blog updates. Circular Action Alliance is an outstanding resource. So they have tons on their website. I'm just going to scroll to the last couple here if anybody wants to take some quick screenshots, but I'll pause there for a second just so you can get that information. But those are at the bottom. There are two of the best documents on the CAA website. They walk through every conceivable scenario. Well, not every. They walk through common commercial scenarios. I will say for a PPAI typical transaction, they're not as good, but for some transactions that you'll encounter, uh, excellent and give you a good base of information to draw from. One thing we like to do also in these presentations is just do a quick regulatory roundup, some of the other things you should be paying attention to. So that includes state PFAS bans, the EPA PFAS reporting, California climate reporting if you're over 500 million or over a billion, which I know doesn't apply to many, but some. The UFLPA, if you're importing products, this is a guilty until proven innocent regulation. We've had clients with containers seized and confiscated permanently by customs. Lacey Act pertains to plant products. There's a Canadian Federal Plastics Registry that I mentioned earlier. There's fighting against forced labor in Canada. And if you do business in Europe, oh my God, stay on your toes. There are so many regulations. We do webinars often, and we have probably half a dozen that are specific to different European regulations. A little bit about us and the services we provide. We don't have to dwell too long there. There's a lot of information on our website. And the conclusion, right? Why this matters? Well, it is critical to safeguarding market access and your reputation as a company. It enables continued growth with key customers, right? You're creating risk if you put your customers in a bind. So you really want to be on top of this for that market access and opportunities with key customers. If you're proactive with key customers, great opportunity. Reduces cost and disruption risk. Easier to solve this proactively than get a nasty gram from states of Oregon, Colorado, or California. And we really encourage everybody to try to turn this into a competitive capability. Don't want to create too much internal competition here on the call today, but some of your competitors won't keep up. And this is an opportunity to win business. So thank you. I'm a few minutes over, apologies, but a lot to cover today. Appreciate everybody's time.
Thanks, Ami.
My
And
pleasure.
I'll get my screen back up here. All right. The good news is we are an industry of creative problem solvers, right? So we got this. We can get past this. Just a reminder to keep questions coming. Thank you for those who have already dropped some in the chat. We'll be at the Q&A portion momentarily. But first, something you should know about me. I freaking love QR codes. So I made 3 more for you. You're welcome. The first goes to that sustainability page that we mentioned, where you can find everything from our definition of sustainability in promotional products to guides, glossaries, a link to our Sustainability Solution Center, which is a handy listing of vetted business service members who are eager and ready to help you in your sustainability journey, and resources like the white paper we shared earlier in the presentation. Then we've got our public affairs page. So you can go here for the latest information on regulatory and compliance issues, including legislation, agency rulemaking, and court decisions, which is important to our industry and professionals who work within it. Last, but certainly not least, we have linked the Circular Action Alliance website. As Ami mentioned, this is the pro you will be registering with and reporting to if you are in scope. So this is who can answer more specific situational questions that you might have, as they are the ones administering the programs and are best positioned to understand how the laws will be applied. Now that I have exhausted the QR code capacity for the presentation, let's get to questions. I will stop sharing so we can actually look at each other. All right, so we have some good ones. First up, I think there's a lot of people who ask a similar question. When you say the importer of an unbranded products for customization is the producer, does this mean the supplier or the distributor?
Yeah, it's very, very nuanced, and it really depends on the transaction. So, if you're first introducing it to commerce, could very well be the supplier. If you are as a distributor putting the logo on it, and your client agrees to take on EPR reporting, it would be your client. If the client is reselling, oftentimes they're the ones responsible. So yeah, very, very nuanced. And where does the supplier get the product, right? Maybe they're not importing. Maybe it's a domestic product. We know some products still, not many, are made domestically. So very, very nuanced, and you would have to pick apart each transaction to understand exactly who's responsible. I would need a lot more information to answer the question definitively.
So next up, this is one I think is super important to ask. Good question. If you are below the thresholds, do you need to register with the pro?
We've actually been in contact with regulators. It is actually not crystal clear. So our strong recommendation is register. And the reason being is then you put yourself on their radar, and they may contact you and say, hey, you registered but didn't report. And you can get back to them and say, well, that's because we're under your state threshold. So that's an opportunity to stay in the clear, versus if you don't register, there is some risk that they come find you, and immediately want to start with cease and desist and fines and such. That said, in certain jurisdictions, you do not have to register. So you could choose not to. I think in California, I don't honestly don't remember off the top of my head. I think in California you have to no matter what. I think in both Oregon and Colorado you do not have to, but don't quote me. I'd have to go back and look. It differs state by state, and in general we say register, because it's easy enough if you register and below the threshold to prove that.
And I think that registration piece also helps you stay up to date too. If you're registered, you're on their mailing lists, you're getting updated information directly from them. So I think that's an important piece too. We've got, what should distributors do in relation during the sourcing of products from suppliers, orders, communication with clients, etc.?
Yeah.
Good question.
It's so much of how commerce has historically been conducted is such that it's been very easy to buy and sell, and oftentimes you don't even necessarily need to know who you're buying from. Sometimes you don't even know who you're selling to, right? I mean, if it's let's say a Shopify site that you're buying from, selling to, I mean, it has been historically quite opaque, and if you wanted it to be. I think what's changing now is you have to bias towards transparency. So when you're buying a product, you have to understand, did your supplier import it? Is your supplier intending to report EPR? If the answer is yes and yes, then you can say, great, we know the box is checked on that particular packaging item. If they say no and no, then that creates risk. Now they may have some of that risk. They may have all of that risk. You may have all of that risk. So that's something that has to be determined and worked out, again, transaction by transaction, and you really can't, we know, analyze this transaction by transaction, but we do recommend transaction groupings, right? Start to develop a taxonomy of types of transactions, develops a scoring or a grouping system, and report against the ones that are most likely. You're always better off reporting to the best of your capabilities and getting it wrong than not reporting at all.
Thank you for that. So, Jamie, this is not a silly question, but the question is, do we have to register and report for any state in which we conduct business, not just where we are primarily located?
That's correct.
Yeah.
So if you are a Canadian company doing business in, selling products into Colorado, you have to register. European company selling to Oregon, if you cross the thresholds. Yeah.
Yeah. It's ultimately where that packaging is ending up.
That's right.
Where you need to comply. So a follow-up on a previous question, are the registration, agency, and reporting processes different with each state?
So the good news is, in Europe, there are, I think, 19 different agencies you have to register and report with. In Canada, there are 5 or 6, can't even keep count. In the United States, luckily, one agency is Circular Action Alliance, where you register and report for all states. So far, there's noise that Maine might go its own way, but we don't think so. We think in general, it's all going to stay with Circular Action.
Fingers crossed. So we had a couple questions come in via a survey that we sent out ahead of the call. This one I think I've had from quite a few members. Are shipping pallets exempt as they are reusable and refillable?
Great question. Reusable materials are exempt. We have clients right now that do, they make a technical product that has sort of specialized packaging, and the packaging is quite expensive, and so they have their customers unpack the item and return the packaging. So that item is exempt. Pallets, same thing. Pallets are exempt because they are reusable.
We have one specific to California. So this member said we are reporting packaging into California. However, some of our customers are reporting as well. If our customers are reporting into California, do we remove that amount from our totals to avoid double reporting?
Yes. So that's something you want to make sure you get crystal clear with your customer. Make sure you understand exactly that they are doing it, what they are doing. Maybe offer to help, right? That's always goes a long way with customers. But yes, if they're reporting, you don't have to.
And the last one we had from the survey was, if we do not yet have the database built to collect product by product packaging data, can we use estimates gathered from our packaging purchased sales records? Example, we bought 200,000 boxes last year at 0.2 pounds each. 10% of sales went to California. Therefore, 4,000 pounds of cardboard was sent into that state.
Yeah. So that answer goes in a lot of directions at once. So some of the states allow what they call the A-bomb method, which is the average bill of materials. So in those states, in those cases, you can develop a bill of materials, but they confine that model to assessing the packaging itself, not so much assessing sales. However, our very strong recommendation is report to the best of your ability. Know that you might be audited, and know that you might have gotten it wrong and therefore might be exposed to some small fine for getting it wrong if you get audited. But we say you are always, always, always better off reporting. It's like taxes, right? I mean, we don't know what the audit likelihood is in this situation. Again, as I mentioned, it's about 3 years old in Quebec. Audits have already begun on data that's 2-3 years old. So we expect to see the same in the United States within the next couple of years. Audits will begin in earnest. But you're way better off if you've reported with some errors than not reported at all.
So we have another one in the chat. This is a great question. Is a durable non-shipping secondary package, like a gift box, considered a reportable item if it is intended to remain in use by the customer throughout the product's life cycle rather than being discarded?
Yeah, if generally if it's something that contains the product and is intended to be discarded as a packaging element, then it is considered packaging. But for example, we have a client in the motorsports industry, and they sell a lot of protective gear, and all the protective gear comes in a mesh bag on a header card. So the header card is definitely reportable. The mesh bag is not. So as one example. So I don't know exactly what you're referring to in this question, but usually if you call something a gift box, that probably leans a little more towards packaging. And in all of this, maybe coming back to this notion of audit, in all of this, just keep good records. So let's say you do decide to exclude that from your reporting, record that. Be ready to explain it. Keep good documentation around it. Again, you are so much better off with high quality responses, even if they're not 100% correct, than you are with no responses.
So we've got another one about locations. Client or a member in New Hampshire with a client headquartered in New York. but could feasibly ship to multiple states to their employees, which is a very common scenario, I think, for our members. How would this be handled for reporting? Is it based on client or recipient location?
Yeah. So that gets back to some what we covered in the case studies. So is the client giving it away? Is the client selling it? Would be some of the questions we would ask. But ultimately, if a product for which you are responsible ends up in the state of Oregon, you are responsible to report that packaging to the state. So these are can be fairly complex, and I will say, almost without exception, what we have found to be the most complex part of this reporting is understanding these types of flows, right? For companies to get clear on how much of their product ends up in a specific state, right? First, you have to determine, are you responsible for that particular product? If you are responsible, does it end up in the state? Yeah, we do a tremendous amount with cosmetics companies, very, very complex distribution networks. And they have had to just unwind those for the first time in, these are 40, 50-year-old companies, and they've never had to unwind it. They've always worked with distributors who represented their brand well, bought large volumes, and then sent that out. Now they have to understand where that's going, and that's true for everybody.
So this is, I think, a question a lot of people have been asking. Maybe I've heard it several times. I don't know if they're asking CAA, but what if the client doesn't have a clue what you're talking about and doesn't know if they're reporting? Who would we
Yeah,
direct them to? I think CAA would be a good place to start, but
without
what
a
do you
doubt.
think, Ami? Yeah.
Yeah, without a doubt. And also, I think part of then your role and opportunity is to be the expert, right? I mean, demonstrating a level of expertise that around this in many cases can reduce or eliminate risk for your client, which is extremely valuable, right? If a client
Yeah.
gets a fine tied to a transaction that you were involved with and you didn't alert them, that creates risk for you, risk for them.
Mhm.
Whereas if you proactively demonstrate yourself as the expert, provide resources, and I think, Liz, you're exactly correct. I think providing resources in this case, I would literally just send them the link to the CAA website. Tons of
Yeah.
resources there.
That being positioned as the problem solver too, instead of an order taker, I think really
So valuable.
shows the value to how our industry is built on relationships. Like
Yeah,
you're coming to your client with a proactive way to minimize reputational risk and compliance risk.
that's right.
That's a great question. So Tracy had a question: is waste during decoration considered? Example, the carrier film on a direct-to-film transfer that is discarded after the transfer is applied.
So the way to think about it is, does that transfer paper end up in the state of Oregon?
So
If you're printing those in Nevada that doesn't have a law, and you're shipping them to Oregon, and the paper stays in Nevada, not reportable. So yeah, you can really think about it as physically, where do the items end up?
all right, we have a couple more to round us out. We have a solid 6 minutes left. Thank you, everybody, for so many questions.
We
This
do
is one that
also want to reiterate that this is not legal advice. This is information and
yes.
guidance. If you're really concerned about your legal obligations, you should consult an attorney.
And I have
Yes.
studiously avoided giving any hard answers.
This is one that I've heard lots when I have asked members about this. I'm a little overwhelmed and I'm not sure where to start. What's the first step I should take?
Yeah, I think the joint document you did with Taft is a good place to start. We also, on our website, we have a 2 or 3 page bulletin that is super high level. So you can download that from our website. We have a dedicated EPR page that has our ebook and our bulletin on it, that you can download. So the bulletin is, if you want a 3 page skim, that's a great place to get started. We have state by state on our blog, another place you can do a lot of homework. We have ebook, and I don't mean to over index on what we offer. It's just we have gotten so much inquiry now for over 2 years that we've kind of been overwhelmed by it, and so we've really tried to provide those resources. But between the bulletin, the blog, ebook, good place to start. The Taft document from PPAI, excellent place to start. Circular Action Alliance, perfect place to start. So there are great starting points. I mean, and everything I just described, you could get through in a couple of hours and come out the other side substantially more knowledge.
Just set some time aside to really
Correct.
learn about
Yep.
it. I think too, it's important to highlight that there are multiple team functions that will be touched by this. Like you said that a little bit, especially with the marketing piece. Don't try and tackle this alone. Like, talk within your organization about who's going to be involved, because there has been a bit of a sense of hot potato with some
Uh-huh.
examples that I'm hearing. You know, this is legal. No, this is operations. No, this is marketing. This is sales, and having everybody who could potentially be involved be up to speed and talking to each other, I think is a really important piece. One more question came in the chat. Does a distributor who is an affiliate or part of a larger distributor organization, should the distributor register, or does the organization do it on behalf of all their affiliates and owners?
So I don't totally know the legal distributor affiliate. I don't know. But generally, if you have your own EIN, prepare to register on your own. That is the
It's
general
like a
guidance.
tax obligation similarly.
Yeah. So there is a provision that you can make a special request. So let's say there's a company that owns, we actually have a client right now. It's a holding company. They own 5 smaller companies. They can report as 5 smaller companies, or they can send a letter to the individual states requesting the ability to report as one.
So ask
We'd
questions.
recommend
Find out.
reporting individually. Well, actually, it's really case by case. Let me strike that from the record. Oftentimes, we recommend reporting individually, just simpler, more straightforward. But if you have substantially interlinked backends, there obviously could be advantages to reporting as one entity. But
That's a great
generally, one
management.
EIN, one.
Awesome. Thank you so much. I would also add another way to stay up to date is to follow our newsletters. Rachel does an incredible job of staying up to date on what's happening and translating that in a way that is relevant and digestible to PPAI members. So one more thing to keep in mind. With that, we're pretty much buttoned up against time here. So thank you again for taking the time to join us. This webinar is being recorded and will be available on the same page you're currently on, so you can bookmark it to share or come back to. And please feel free to connect with myself, Rachel, and Ami on LinkedIn, and stay tuned for updates from PPI Media as we get further updates on these laws. So thanks again for joining me, Ami and Rachel, and
Thanks for
have a
having
great
me.
day, everybody.